The next big print is going to come when something breaks, maybe the bond market, maybe the stock market, whatever it is, and the government realizes that they've got to, or else everything's going to collapse. That's coming. Outside date on that is 18 months. Inside date on that's tomorrow. Medium date on that, 6 months maybe, 6 to 9 months. I think when that occurs, Bitcoin will go and exceed the power law. We'll get a 2 standard deviation move above, and we'll pump to 300, 350. I think gold will probably run to, now I'm beginning to think 4,000 or 5,000. We now live in an inflationary world, and people really need to think about that in the context of their investments and how they're going to protect themselves, and therefore the need for sound money.
Lepard begins by discussing what he calls the next big print, a major monetary event that will occur when something critical in the economy breaks. This could be a collapse in the bond or stock markets, triggering panic in governments as they scramble to inject liquidity to avoid a complete financial meltdown. According to Lepard, this major economic event could occur within the next 18 months, though it could happen as soon as tomorrow, depending on market conditions. He predicts that when this big print happens, we will see significant price movements in both Bitcoin and gold. Lepard believes Bitcoin could surge to $300,000 to $350,000, while gold could climb to $4,000 or even $5,000. He also foresees silver potentially reaching $75 to $100. These price moves will be driven by a massive injection of liquidity into the economy, pushing the price of sound money assets much higher.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think on the next ramp, I think we're somewhere short of what I call the next thing I call the big print. Okay, so the next big print is going to come when something breaks, maybe the bond market, maybe the stock market, whatever it is, and the government realizes that they've got to, or else everything's going to collapse. That's coming. Outside date on that is 18 months. Inside date on that's tomorrow. Medium date on that, 6 months maybe, 6 to 9 months. I think when that occurs, Bitcoin will go and exceed the power law. We'll get a 2 standard deviation move above, and we'll pump to 300, 350. I think gold will probably run to, now I'm beginning to think 4,000 or 5,000. It's getting closer to 3, right? I used to say I'd run to 3. Now 3 is too low. I think silver will probably run to, 75 to 100. Okay. Following that, my suspicion is there's a possibility that we get such severe deflation that even in light of the big print, everything still kind of quote unquote collapses, a la 29, and there'll be an enormous scramble for liquidity. And the Fed will do everything it can to provide liquidity, but absent literally sending out checks in the form of UBI to everybody, the economy will be collapsing. And this is kind of David Hunter's scenario too. And in that case, the Bitcoin will probably correct from that 200 or 300 peak back down to 85 or 100, and gold will correct. Gold will have a serious correction too, because we'll have a really deflationary impulse. I think then the next move is you'll get quote unquote the bigger print, right? Okay, the economy is totally collapsing. Nobody has any money. The prices of everything are falling. We're literally going to do UBI, where we're going to send every family a check for $50,000 to kind of keep things going. And to me, that one will be the last one. And at that point in time, Bitcoin will go to 1 million, gold will go to, 20, 30, 40,000, and effectively the currency will fail. And there'll have to be some kind of political meeting of the minds to solve the problem. And I kind of see the time frame on that as probably 2027, maybe as late as 2030, 2031. If you look at this as the fourth turning, and you look at the average length of fourth turnings, you start at 2008, which is what I do, and you add the average length, you kind of get into the late 2020 period, like 27, 8, 9 kind of period, 2028.
I see, yeah.
We now live in an inflationary world, and people really need to think about that in the context of their investments and how they're going to protect themselves. And and therefore the need for sound money. And I think the thing that some people are missing, I mean, I know that the consensus on Wall Street is, yeah, we're going to get a soft landing, inflation's under control, the 3% is going to become 2%. We're going to go back to that, happy days that we had from '08 to 2020, 2020 or so, and market's going to go on to new highs, and the economy's going to be fine. I mean, that's the bull case. I don't see it. I just don't think that. I think there are too many, potential problems in that scenario for that to actually occur.
Yeah.
I think when things break, gold's going to go through 3,000 and Bitcoin's going to go to 150, and easily in my view. Because they both represent sound money. I mean, one is old and analog and tired and widely distributed. The other is new and growing and therefore has a lot more upside because of the low level of adoption. I mean, I'm always, Crisis Bitcoin on Twitter always has that. I'm always amazed at the chart where still the entire Bitcoin market is only $1 trillion in the context of $900 trillion of financial assets in the world. I mean, we're talking just a real sliver of the amount of money in the world is invested in the soundest asset in the world. And so, as time goes by, more and more people are going to come to realize that this is the soundest asset, and they're going to adopt it. And it's, that disparity is going to close, right? I mean, Bitcoin's market cap is going to be much higher than it is right now. Here's my prediction. I think by the end of this calendar year, we'll be over 100,000. Bitcoin's forming this nice declining flag. Top of the flag, it looks like you kind of break out at 66 from the flag. You break out from the all-time high at 72 or 3. I think when we go through those, we're going to squirt up to 100, very quickly. So, and I think the gold is a tell. The gold hitting records, and the awareness on the part of a larger and larger part of the world that something's wrong. I mean, the disconnect is, you've got guys like Krugman tweeting, hey, we've done it. We've landed the plane. 2% inflation, 3% inflation. It's all good. Everything's great. And I tweeted back to him. I said, yeah, okay. If that's the case, then why is gold at a record high? If you successfully landed the plane and inflation's under control, then the price of gold should be going down, not hitting new all-time records, right? It's hitting new all-time records because it says you guys are debasing the currency and you're going to have to debase it more in the future. That's what gold is telling us right now.
Lepard emphasizes that gold's recent price strength is a signal that something is wrong with the global economy. Despite mainstream narratives that inflation is under control, the fact that gold is hitting new all-time highs suggests that central banks are debasing currencies at an accelerating rate. Lepard notes that while U.S. investors have been slow to buy gold ETF, sovereign nations and international businesses have been buying gold in record amounts.
In the United States, the gold ETFs have been shrinking. They're not, the size have been going. So the U.S. ETF buyer has not been buying gold ETFs until very recently. They started to turn up. That's in contrast to the Bitcoin ETFs, which have been growing. And I think a lot of that's age related. I think older people buy gold, younger people buy Bitcoin. What's, in my opinion, supported the gold price is the sovereigns, who've been very large and record level buyers over the last 5 years. But even more than that, just international businesses that have kind of come to realize that if they store their treasury assets in, T-bonds or dollars, that they've got a melting asset, that it's not going to hold its value. And so, you've seen enormous growth in the volume on, the Dubai Gold Exchange and the Shanghai Gold Exchange. And so I think there are people who may be doing trade in dollars, or they may be doing trade in, rubles or Chinese yuan. But, at the end of the day, if they don't have a cross-border need to go back and spend whatever they receive, like say the Chinese, pay for oil with a yuan. Well, if the oil vendors aren't in need of something out of China, my gut is they're taking that yuan and they're converting it into gold. Whereas historically they would have taken that yuan and converted it into dollars or treasury assets. But I think the world is slowly, there's a lot of evidence, and you got to look kind of between the cracks, and you can't prove it, but you can see volumes and so forth. That I think there's a lot of evidence that would suggest that there's a very big trend among savvy financial people around the world that, the dollar is no longer a good store of value. and that gold is a much better store of value. So I think that's what's generally been driving the gold price. Now, as the U.S. stock market rolls over, and I think it might be in the process of doing that, but I could be wrong. I think we've started to see some upturn, in U.S. ETF gold buying. One small piece of anecdotal evidence, though, that I do find interesting and fun is that Costco, which is a big warehouse, retailer here in the United States, they sell cheap everything. They've been on every quarterly call, they talk about the record volume of gold bars they're selling. And so, there's some segment of the U.S. population that's pretty aware of the fact that the dollar is losing value, and they go to Costco and they pick up a gold bar, and they consider that to be savings, and rightly so and intelligently so. I mean, I'd like to orange pill them and have them do the same thing with Bitcoin, and ultimately probably they'll get there, but they're not there right now. Assets have been extremely overvalued, but that doesn't mean they can't become even more extremely overvalued. And the stock market is more expensive than it was in 1929. I mean, John Hussman's done great work on this. I mean, for the stock market to go back to using the historical metrics, and you can say they don't apply this time, but I think they do. For the stock market to go back to kind of a normal level that would represent somewhat fair value, it would need to fall by 65%. So, right now, everybody who's got all their IRAs and their retirement accounts invested in the stock market, and they hear that number, and they ought to be shocked. I mean, I know I would be if I had all my money there. Because it's not like bear markets have been outlawed forever. I mean, what's happened here is we've just got a bubble that's really, really big and keeps getting bigger. But having analyzed historically, dozens of bubbles, I can say with a high degree of confidence that all bubbles ultimately burst, and they mean revert. And so, I think that the other alternative, of course, what we're talking about here, the forces, we've got two forces going on, right? We've got an inflationary force and we've got a deflationary force. Debt is inherently deflationary in the longer term, because what you're doing is you're bringing consumption in earlier, and then you got to pay it back later.
Lepard concludes by warning that the U.S. stock market is in a massive bubble, more overvalued than it was in 1929. He cites research by John Hussman showing that for the market to return to fair value, it would need to fall by 65%. Lepard believes this bubble will eventually burst, as all bubbles do, and when it does, investors who are heavily exposed to stocks could suffer significant losses. Lepard argues that sound money assets like Bitcoin and gold are the best way for investors to protect themselves from the coming financial storm. While the road ahead may be volatile, those who hold these assets will be better positioned to weather the economic upheaval.
Please like and subscribe my channel.